If you break down the cohorts of people who adopt Bitcoin, right? So we have individuals, we have corporations, we have financial institutions, we have nation states. The first one being individuals. Majority of the individuals that are already in Bitcoin are not going to use the banks, right? The banks are not going to get our Bitcoin. That's, I think, pretty clear. New people who want to come in that are either older, they're not digitally native, they, for some reason, have not felt comfortable buying Bitcoin. They are the likely individuals to go ahead and put Bitcoin into a bank, right? They trust their bank. Whether they should or they shouldn't, there's a trust with the brand at their bank. And so they're more willing to trust the brand they know than a brand that they don't know that somebody told them to go create an account somewhere and do something. So I think there is a cohort of people. It's just not the people who are already in that would trust the bank with their Bitcoin. I would not. Then you go to the financial institutions. I think the financial institutions can't wait to get the banks in the game because now all of a sudden they get to use the same counterparties that they've been using, that their regulators are comfortable with, that their auditors are comfortable with, that their internal teams are comfortable with, that their compliance departments are comfortable with.
It's a trust factor.
They already have the relationships, etc. It's a recreation of the world that we used to have. Again, I'm not arguing this is a good thing. I'm just telling you what I think is going to happen. So there's a lot of financial institutions that I think this would be a big deal because now if you're a bank, you get to put on your balance sheet, but also if you interface with a bank, they can hold your assets for you. You can buy and sell with them, etc. And then you can also use this as collateral. I think people forget, like, Michael Saylor of MicroStrategy, a perfect example is as you use this asset as collateral, he could go and he could borrow a bunch against it because he's got billions and billions of dollars of it, right? And so I think that that's going to be a big piece of the system moving forward. Then you go to corporations. I absolutely believe that corporations would love for their banks to be able to custody this stuff for them or to hold it and allow them to buy and sell from it rather than going to the crypto companies. Again, not arguing that it's a good thing. I'm just saying that if you're a Fortune 100 company, do you want to trust Coinbase, which again has a high degree of trust because it's the kind of most well-known exchange when it comes to cryptocurrency in the United States. But would you rather trust Coinbase or would you rather tell everyone, hey, JP Morgan holds my Bitcoin? Right? Of course, Wall Street, your investors, regulators, auditors, etc., whether they should or not, they're going to assign more value to those legacy trusted financial institutions rather than going
especially
to
if there's some insurance built on top of it.
Absolutely. I mean, imagine if there's FDIc insurance on your Bitcoin account. Yeah. That's a huge advantage, right? And remember, there are insurance on Bitcoin accounts today. Coinbase and Gemini, those are the two that I know. I believe SoFi as well has insurance, but the two that I know distinctly are Coinbase and Gemini both have self-insurance. And I believe that they both have set up captive insurance, which basically means that it's not just, hey, we put some money on our balance sheet off to the side, and if anything happens, we'll pay out. They've actually taken their own money. They've put it into a regulated entity that they technically don't have control over. And then those insurance companies specifically are used to insure their accounts. It is not FDIc insurance, right? So that's like the holy grail of insurance is FDIc, but it is at least better than no insurance. So we've kind of taken a step in the direction. FDIc would be the big unlock. And then lastly, you have nation states, right? And I actually question whether nation states would use the banks or not, because if you think about it, El Salvador, if they are going to get into Bitcoin, would they really trust a US-based bank? I don't know, right? Well, what if there's a bank locally? Would they trust the local bank? Let's say a Salvadorian bank? I don't know. So there is an element of you're going to get a bifurcation. Some people are definitely going to trust the banks. Some people aren't going to trust the banks. And some of it also, I think, is there now might be a switching cost in reverse. So a lot of people think of the legacy world switching into the crypto world. That's a high switching cost. I already have a bank account at name your favorite large bank. Why do I have to go sign up for a cryptocurrency exchange account, right? But if all of a sudden I've now gone through all that work, I've got my compliance team, I've got my auditors, my regulators, everyone comfortable with my crypto kind of native setup or my vertically integrated crypto setup, then if now my bank accepts it, am I really going to switch back? I don't know. That's what we're going to see. But I do believe that if FDIc insurance comes to accounts where you can hold Bitcoin, that would be a massive inflection point in terms of adoption. And also, I think that there's a very big argument that this would usher in the financialization of Bitcoin. There are some very bad negative impacts of that, but the positive impacts would be around higher prices in US dollar terms because you've got higher demand now for the asset and it's a fixed supply. So it's a nuanced conversation, but I don't think anyone had on their 2021 bingo board, FDIC is going to figure out how to get the banks in the game of Bitcoin this early.